I don't like leverage. I typically tend not to lever up. I think leverage is like, how do you put it? I think it's what causes most amount of losses in the market. People don't realize that it is very hard to retain your emotional sanity and act rationally if you have 10 times leverage on your portfolio. I don't think any human being can. The first thing I would advise people is stay away from leverage. I mean, I've burnt out many times in my own professional career, especially when I started off. I think when I started, I was about 17, and I'd have gone bust at least three times or four times, not sequentially, because the markets always make you think you can make money and then they make you lose money. Market has a emotional personality profile of its own. So leverage, definitely stay away from as far as possible. I mean, if you have a long portfolio, you're using leverage to add a certain amount of shorts and hedge that portfolio, sure, get leverage. But vanilla leverage, when you're long and you're buying more calls and more futures and stuff like that, is generally a bad idea. That's a big lesson. The second thing is being too stock specific. I mean, immaterial of how well you know a company and how much you have researched a company, uh, you still shouldn't be putting all of your money or a significant portion of your money into that one company, because there are so many factors at play that one cannot possibly have a system to predict or possibly rationalize, because India might go to war with China tomorrow, and there's no way in hell an infrastructure company investor kind of factored that in. So always have diversification, not just amongst asset classes, but even amongst the companies that you hold. I think that's big lesson. That would be no leverage, ample diversification. Third point would be is don't follow tips and I'm from the industry and it sounds bad when I say this, but typically people who give you tips on penny stocks and small cap companies have ulterior motives of their own in mind. And I'm
Correct.
talking about people who message you blindly on your cell phone and stuff like that. You're best suited to avoid these companies and these tipsters. Put in your own research and then go and allocate money to that company. Yeah, I think these three lessons are very important lessons where many early first time investors falter. I think a lot of people go by, my friend said I should buy this at 50 and it will go to 100 in 3 months. I mean, if people were right with that much consistency, he wouldn't be your friend anymore. But I think it's best to avoid these things.
So rightly said. I mean, time and again, when I talk to people who are in markets,
Yeah.
the first thing that they always mention, and that's been my personal experience also, means in 2005, I'd been trading a lot of FX and
Mm-hmm.
means huge quantities of FX. And for the last, I still trade, but then in the last many years, even I learned one thing that no matter how wrong you go, but if your leverage is fairly okay, you will not screw up.
Yeah. 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 And you might as well go wrong on your own calls. At least then you learn something.
Correct. Correct.
Yeah.